For the past two videos, I've been solving multiple choice questions from the IMA CMA package. If you want to have access to that, which is accessible to the public, check the video description below to use the link to access it. And once you do, you also have access to a cheat sheet that I've created that has all the formulas in one place that you can cut into pieces as flashcards. In this video, I'm going to solve 31 to 40, so 10 questions. And before I start solving a question, I recommend that you pause the video and solve it yourself and compare your answer to mine. So let's go ahead. Question number 31, what it says. It says a Bangladeshi wholesale export company publishes a price list in euros, okay, for the products sold by European Union. The management of the export company has determined that even if there is a fluctuation in exchange rate between the Bangladesh taka and euro, PNE euro, it is not practical for it to change its product prices every 6 months. Which of the following is the most appropriate solution available to the export company to manage this risk? Okay, so managing risk. What do we do when we want to manage risk? If you know a term, one term in your mind, that will be easy. How do we manage? So we have manage, which is or mitigate or avoid. And especially when it comes to adverse of market price movement. What is the term you will call this? There's one term for it. I would describe this as hedge. So once I know what the company, the most appropriate thing to manage risk, okay, to manage this fluctuation, okay, so that is the market price movement, adverse of market price movement. I know we have to hedge it, okay, and we hedge it with example with money market. That's a type of hedging for this market. Money market, we have futures, contracts, and then currency option, and then forward contract. Those are all types of hedging. So when I look at my options, hedging the risk through financial instruments. So I know A is the correct answer because we're dealing with advertisement of price movement. So A is the correct answer for question number 31. Once you try answering some questions in your mind, it makes it easier for you or less difficult for you to choose the correct answer. Question number 32. So I have a bunch of data here. This is a type of question that I don't read everything. I go straight to here and say, and see what I am required of. A company expects to receive additional order that will allow it to sell 55,000 units its purchase. If the company accepts this order, its operating income will be. So we want to know what will happen if we sell all 55,000 units. Okay, what will happen to our operating income? And here the data is for 50,000. So we have a retailer plan to purchase 50,000 and sell. Okay, so here everything here is for 50,000. Okay, so it's for this 50,000 unit here. So that's the data we have. So we are going to find the impact of that 5,000. So the difference, this 5,000. What will be the impact of that 5,000? So we know our, we're going to find per unit first. Okay, so let's find the per unit first. So we need to find our contribution margin. Okay, we're going to do the contribution margin per unit. I don't want to take 50,000 divided by 50, 50 million divided by 50,000 and 33 million divided by 50 million. Okay, I'm going to do the difference between those two. So we have we have a 50 million. So I'm going to have a sales of 50 million minus variable cost. So total variable cost will be 33 plus 5 million, which is 38 million. So these are millions, okay. So now our contribution margin is going to be 12 million. So total contribution margin is 12 million, and we're going to divide by unit. So division, divide to find the per unit, divide by 50,000. So that means CM per unit is 12 million divided by 50,000 is 240. So CM per unit is 240,000. I mean $240. Okay. So now we want to find the difference in the 5,000. So we're going to multiply 240 by that 5,000 because we sold 50,000 and now we are going to sell 55,000. So we only need the difference, which is the 5,000. So we're going to multiply 240 by 5,000 multiplication. That's going to give us 1,200,000. Okay, so 1,200,000 is the increase in profit that we're going to get if we sell the 5,000. But what do we have now? Now we have 5 million operating profit. So we're going to add the 5 million to it, and that gives us 6,200,000. So if we sell the additional 5,000, which the additional 5,000 gives us a profit of 1,200,000 plus the 5 million we already have here, our total profit is going to be 6,200,000. So the correct answer for question number 32 is B. So now let's move on to question number 33. Sorry. Well, which of the following is an example of an overarching ethical principle from IMA Statement of Ethical Professional Practice? All right. Now, if you do not know this, I'm going to show you how you can remember this. I have a phrase that I call "I am sick." I am sick for it. Okay. Yeah, sick for it. Sick pronounced as SE like that, and for this. Okay. The sick is the standards. Okay, so we have C, C, I, C, and the 4 is F. In case you don't remember, FHOR. Okay, so FHOR are the principles, and the SIC is for the standard. SIC standard, F principles. Okay, 4 principles. So we have fairness. So it's asking for the principles and not the standard. So fairness, honesty, objectivity, and responsibility. So A, competent is the standard, confidentiality is standard, fairness is the principle, and then integrity is standard. So the correct answer for this is C, which is the fairness. Question number 34. A company produces ready-to-bake pie crust. In deciding whether to process this product further into complete ready-to-bake pies by adding filing, relevant dollar amount to consider will include all of the following except. So this is an except question. Okay, except questions I always think that I pay critical attention to because I find the option that is correct to the statement, but it's not the correct answer. So they are always tricky. So I want you to pay attention to that. So we want to see by adding filing which one is relevant cost. Okay. Which one is not? Which one is irrelevant cost? All right. Irrelevant cost. So we'll talk about relevant. Relevant means it is avoidable or additional cost. Irrelevant is unavoidable or committed cost. So it's committed. We have already committed. Okay, so which of these costs is irrelevant? Okay, because we are considering those that are irrelevant. Okay, because it says relevant cost. So everything else will be relevant except one, which is irrelevant. So cost to add-in filing, which is A, cost to add-in filing, is relevant because it's an additional cost. Okay, we want to add filing, so it's not the correct answer. B, cost to manufacture the crust. That is unavoidable and committed because the company already bake the crust. Okay, so that is irrelevant. This is a irrelevant cost. Whether we add filing or not, we still are committed to making the pie crust. So B is the correct answer. So we're going to choose I'm going to choose B and move on. So B is the correct answer. Question number 35. Okay. A company can sell its existing building for 500,000 in order to purchase. Okay, we can sell this for 500,000 in order to purchase a larger facility for 750,000. The existing building was purchased 5 years ago for 150,000 and has a current book value of 350,000. The pre-tax net cash, pre-tax, pay attention to this, net cash outflow from the purchase of a new building is. All right, I want you to solve this question and then compare your answer to mine. So we are looking at a pre-tax, okay? Pre-tax. The company can sell the existing building for 500,000. That is a cash inflow. 500,000. That is an inflow, okay? But then they have to buy a larger facility for 750,000, which is an outflow. Okay, I want to know the net outflow. All right, the net outflow, inflow and outflow will be 250,000 net outflow. Now you will ask why? Why did we not use 450,000 and 350,000? The question asks for pre-tax. If we were to ask for after tax, that is when we will look at the savings we made on the sale of the unit of the current book value or the current unit, or the tax we do have to pay. That's when we consider. But when they ask for a pre-tax, we don't consider the book value and the current value or the historical cost. So we only consider the 250,000 net outflow. So the correct answer is B, 250,000. Question number 36. A company with 40% tax rate is deciding whether to keep an old machine or replace it with a new machine. Annual depreciation expense is 3,000 for the old machine and will be 5,000 for the new machine. When using net present value to determine if the new machine should be purchased, depreciation would increase the incremental annual cash inflow of the investments by. All right. Good. So now let's talk about depreciation shield. Okay. So savings in depreciation as depreciation shield. So how much will cash inflow? Savings in depreciation is what we call depreciation shield. So depreciation shield, the formula for depreciation shield is depreciation expense multiplied by tax rate. All right. So if we invest in the new machine, or let's see, okay, annual depreciation expense for the old machine. Okay, so the old machine, how much tax savings do we get? And we are getting rid of that. Okay, so the old machine was saving us 3,000, depreciation multiplied by 0.4, which is 1,200. That is for the old machine. And we are getting rid of the old machine. Okay. We are getting rid of the old machine. Okay, so that means we are losing 1,200 that we're getting rid of. Okay, that is a loss. Okay, now what about the new machine? The new machine is going to have a depreciation of $5,000. Okay, so 5,000 multiplied by the 4%, which is 40%, is 2,000. So although we're losing 1,200, the new machine is giving us 2,000 tax shield. So 2,000 minus 1,200 is 800. So it's going to increase by 800 cash flow. So the cash flow is going to increase by 800. And the correct answer here is B, which is 800. So let's move on to the next one, which is question number 37. A company is interested in a capital project that has a net present value of 0. Okay, the company should, okay. All right, so if we have a net present value of 0, net present value of 0 means that IRR equals rate of return. Okay, the expected rate of return is equal to internal rate of return. So what should the company do in this case? So A says accept the project because the company required rate of return has been met. That looks like the correct answer. Okay, so that looks like the correct answer. Okay, but let's go to B. Accept the project because company's value will increase. Okay, company's value only increase if NPV is positive. And here NPV is 0. Okay, so that is not the reason to accept it. Reject the project because its cash inflow equals the project cash outflow. Okay, if that is the case, we are not going to reject it. Okay, reject the project because its internal rate of return is 0. Internal rate of return is not 0. It is at the rate where NPV is 0. So IRR is at the rate where NPV is 0. So once NPV is 0, that means the rate of return equals to IRR. So that's not the correct answer. And the correct answer is A. Accept the project because the required rate of return ROR has been met. Question number 38. A large multinational company currently has its information technology department located in Germany. In order to reduce the risk of system failure, okay, the company has decided to split up the information system department into 2 geographical separate locations and set up a new location in Singapore. The company can still face catastrophic system failure, but the risk will be greatly reduced. The risk that remains after the company set up the second information technology department in Singapore is best described. Okay, so everything that we read, okay, the only thing we need to consider is this part, the risk that remains. So the last sentence is what is important. We read everything, but the last sentence is the only important part. Okay, the risk that remains. Okay, well, business risk. Business risk is the company may not make profit. Okay, the risk that the company may not make profit. B is what explains the remaining risk. The remaining risk is residual risk. Okay. Hazard risk. Hazard risk is risk for building and natural disasters and things. That is hazard risk. So that's not inherent risk. Is the risk that is there without making any attempt. So that is also so the correct answer is residual risk that is remaining after management attempt. Question number 29. A toothbrush manufacturer. And by the way, if you want to know details about this and how to remember types of risk, You still check the video description, but I use the link. You will have access to my cheat sheet, how to remember these things. A toothbrush manufacturer has noticed a shift in customer preferences in its growing Asian sales market toward an electronic battery-operated toothbrush from a manual toothbrush. This shifting of customer taste, okay, best represent what type of risk to the toothbrush manufacturer. Okay, so once I read it, I automatically know what that is. Okay, customer taste, something that is a risk that is outside the control of the company. Okay, that is strategic risk. Okay, so this is a strategic risk. Company, customer taste, or political things and other things affect the strategic risk of the company. So A is the correct answer, strategic risk. But if you want to know B, operational risk is a failure. Okay, if there is a product failure is operational, or the failure to comply with law is operational. Financial risk is the risk that affect asset and liabilities based on changes in the financial market, like interest rates and other things. So that's not the correct one. And business risk is the risk that the company may not make profit. So the risk that the company may not make profit is the business risk. So from this, the correct answer is A, strategic risk. The last question for this video, and then you may, I recommend that you watch the next video, which will be 41 to 50. But this one, a company has developed a new technological advancement paper-thin solar panel for residual home use. The company has decided to start selling the solar panel worldwide next month. As this is a technological innovation product, one risk that the company faces to sell the solar panel is possible product failure. And I have explained this in question 39. So you should automatically be able to recognize what the question is about. This risk of product failure is best representative of what type of risk. So we know product failure is operational. Okay, either product failure or failure to comply with law is operational. So we'll go ahead and select question number, select option number B, which is operational risk. There are types of risk. And if you want to remember, know how to memorize them, or know how to how to learn them faster, use the link in the video description below to have access to my cheat sheet and to learn how to remember them faster. But this is the end of this video, and watch my next video as I go through question number 41 to 50. As you prepare for your examination, I wish you good luck.